Yo, what is good, High TF Mob? It is your boy Booba back with another video. And today is the beginning of a new month. All right. So what that means is I'm gonna brush up all my high frame outlooks. I'm gonna clean it all up and then have it readjusted for this month's outlook. And then we'll just start from the top down with our main pairs. I hope you guys have been having a great weekend. Right now, I'm not very fond about celebrating the fourth. I'm not even gonna hold you with all the laws and stuff that have recently been passed, and just how the country treats us, but we just can't. That's a discussion for another day. But today I'm just here to keep it simple. We're gonna basically move our weekly highs and lows because whenever the new monthly candle opens, again, we generally have the motion start off with its fake move with the candle. And then once the fake move is thrown, the real move begins to play out. So with our market structure for AU, I do see price was in a weird descending channel here, and then it just broke to the downside. They wiped out this previous leg here, so we should expect price to retest this area or this zone and then push further lower to the previous institutional level, that being these wick rejections down here. So for me, if I'm looking at this, I like where the weekly lines are for the bank levels. This is supposed to be 76, yep, and this is going to be 68,500. Let me see, maybe if we do 68 flat, that'll work. Okay, so we'll move that down. And the reason why I'm even moving this to like the next flat level is because what I'm trying to do is, again, the goal with my strategy is to constantly trap price as consistently as we can, so that we can see the outlooks throughout the week. Because again, we know 1 week takes 7 daily candles. So the way this week candle is starting off looks like it wants to buy. So we may have 2 daily candles buying up, and then the next 4 could be moving down after retesting this high here. We can see we broke this whole low here. Excuse me. So this does have the potential to be a false breakout if price decides to reverse back into the zone that it just left. So here, if we go to give me 1 sec, we'll go our daily. We're going to make our quick adjustments. So again, we like to keep the outlook neutral. So we have our take profit 1, which will be, I like to keep the first one relatively close. And hold on, this is the one to the downside, so we'll have to move these out the way. Okay. So TP1, you could choose here or here. It's up to you how much room you want to give it. To me personally, I like to have my TP1 in a zone where price would have to bend backwards to even touch it. So if price were to even come back all the way into this zone to come touch this price, that gives me more, it basically gives me more evidence that price would be more likely to break past these previous highs and continue up even higher, which would give the ability for that price to even get near or close to take profit 2. So I would have to see price break this zone over time for me to think that, yeah, the daily should be reversing the other way. So again, that's why I would pick that as a TP1. And that way, any type of movement between this zone, this high, and this low for our TP1, which should be on the downside. So if I'm going to take profit, look to the left. And remember, we always aim for the wicks, because wherever these wicks are created, the banks leave and never came back, which means institutions got involved. So this one, they left, they did come back, but they did respect it and then left, and then never really came back to that zone. So if I highlighted this space, price never touched it again and left. So again, that's a key level where I could see us coming back to collect contracts because there's a bunch of buyers sitting here that the banks are looking to come back for, which is why we have this sell happening. So again, with starting with the monthly, because this is our new candle that's going to be going up and down for 30 days long. You have to think this candle started up last week on Friday, and over the weekend managed to drop just a little bit further. I think Friday we did get the sells that popped off, and then they pulled back up towards the end of the day Friday, and then now we have the second weekly candle of this month. So we were during last month, during June going into July, we had this weekly candle that crossed over into both this month and last month. So because of that, this weekly candle is pretty important to watch because we know now that coming off of last month's, it's generally going to be towards the end of the weekly candle because again, it takes 7 days before this candle prints. So price opened at this area, went up a little bit, and then sellers took over, price dropped, then the buyers closed their position, the sellers closed their positions and buyers started to buy back up. So moving into this week, again, we have 7 days to work with. If price moves for our first 3, I could expect price to test this zone or maybe even higher and then continue the trend downwards because one or two things, it could be that this candle wants to test this high or that this whole structure from this leg wants to test this high. So this is why waiting for a retest makes sense. So now with me knowing that information and me having my daily take profits mapped out. So if I'm going to look at my second TP, let's move it to this over here. Okay. So it'll be right here at this wick. And then my third one will be down here, kind of just where the structure left at. Honestly, there's some contracts back here. So we'll even do that. I like to do where contracts would be more likely to be chilling at, like, because you got things, there are people out there that caught it from these spots, these pinpoint areas. It's, it's hard to do, but if you did it, they'll definitely won't want you in there for too long. So now we know we're at our weekly low. And something else I also wanted to do to kind of make this week easier for us, as far as tracking it, I wanted to highlight the top and the bottom of the previous weekly candle. Okay, so this is kind of what I mean. Let me show you. So keep in mind, last week, Sunday, the market opened. Between Monday through Friday, price managed to go up from Sunday to Monday buying and then selling off majority of the week, and then buying back up towards the end of the week, right? So we know our peak high was here, our peak low was down at these tops and bottoms of these wicks. We know the daily open and the daily close was here and here. It's where the market opened for the day, closed for the day, right? So the peaks are the levels that we need to break for price to keep moving in one direction. Okay. So if I were to trap or highlight the peaks like that, and then we go down, and keep in mind, we want the bottom of our line to touch the tip of each wick. So I'm gonna highlight and squeeze as much as possible because what's gonna happen now is this week's gonna play out. And since we already have the high frames mapped out and we know where our TPs are that we want to target based off how price is moving, we can get really sharp with our entries down here on these frames. I might find a different color. Let me see. I guess we could do yellows, right? Yeah, let's do that. I like that faded yellow because I don't want anything to kind of make things pop or be extra. I'm trying to keep it real simple for everybody. So that way, like while y'all are applying this, you can pick it up easy over time. I don't know what color what color was that? Oh, that was like a grayish. Okay. Bet. All right. Yeah, I don't know. That's weird. I don't know why this looks kind of gold. I don't know. All right. So it is what it is. Let's drop to the daily now. Yeah, there we go. You could do the same for the daily if you want to even, but for me, I'm going to do it for the weekly high and the weekly low, the peaks, because now that we have everything mapped out, you can kind of see here, this was our peak close, peak open was up here. So now we have all this room to work with. We also have our market structure that we learned from Real Rise Academy with our anchor points. So we know all we want to do is find on the 1 hour our pools of liquidity. We want to find our swing high, our swing lows, so that we have our anchor points, and then we follow the trend based off how price is reacting from there. So if it's me and I'm looking at this entire section here, price created a peak low back here or a swing low back here that led to this swing high being created. This swing high got wiped out, okay, but it got wiped out by this high here, okay? So over time, price trailed back down, consolidated, built up a lot of contracts, a lot of buyers were trying to, basically got trapped. And then after that, they sold it down, wiped all the buyers out. And now we have a situation where they're going to come back and close all their buying positions to then basically take a break even on that buy position and then continue the market down. That's if they decide to respect our peak high and our peak low here, because then that tells us again that the weekly candle wants to move in favor based off how it's printing by the end of the week. Okay, based off the direction it's going in. So again, this is our peak candle, this is our low. So maybe the candle will end off the week and it will look something like this. And we don't know, right? Like every week is a surprise. But we could get like a nice wick right here. Hold up. Get a nice little wick right here. Then you could end up getting a nice little push down by the end of the 7 days. If I could even draw a candle with this. So our candle could look something like this by the end of the week. But just keeping in mind that we're coming down for these positions. And then the next week, same deal. Same deal. Okay. So I'm always going to do a refresher of the strategy and adjustments at the top of the month, because it kind of clears up everything. I feel like things get a little tricky by the end of the month. And usually I'm learning myself that the end of the month is not a good time to trade, because you got to think after the end of all that movement with the monthly candle, the last like 10 to 15 days, most times people are collecting all their money from all that movement throughout the top of the month. So you have a situation where people aren't in the markets as much, or people are taking a break and waiting for that next candle to open on the monthly chart. And that's why you're going to have a lot of like pulling back up and fluctuation going into your next candle. So let's go. Let's get it. Let's get it. Let's get it. All right. So now I'm going to go ahead. We're going to mark our anchor points. So we have our swing high here. Remember, I like to get the wicks. Boom. Swing low is going to be right where the peak low is at. Yeah, I don't know if I like that color. I might do like a green. Yeah, that's smart actually. I'm gonna do a green and match it with this. That way we know each week. Mm. Okay, there we go. There we go. There we go. All right. I just want to tighten this up real quick. But yeah, honestly, once you get the hang of breaking this down over and over, it's just a matter of how you're applying it in real time and how you're applying your math to make sure that you're not over leveraging As long as you don't over leverage, you're safe every week, pretty much. Just be patient. Be patient and take your time for sure. Even till now, like I get caught up in consolidation traps. It happens. It's part of trading. So if I wasn't doing the math properly, it would be a whole different story for sure. Okay, so we know now this is profitable. This is a profitable setup. You can start buying this. I'm not gonna lie, I might buy this. This is actually a really good setup for me to start the week, but I want to wait for maybe 6:30 and some confirmations. Maybe I'll wait for the 8 o'clock candle too, because keep in mind, if you have a situation where you could wait for the candle to break off and then get in your trade setup, I always will advise that to a trader rather than getting early, especially if you're inexperienced. So for example, at 8 o'clock, this next 4 hour candle is going to open up. This candle will do whatever it'll do for the next 3 hours, right? 2 hours and like 40 minutes. But as soon as this candle closes, with how it closes, it gives us information on whether buyers are still in control or not. And then on top of that, it gives us the ability to use the next 4 hour candle and the low frame to find an entry on it. So in this case, because we look for liquidity, and that's what markets usually go after, we'll mark the consolidation zones or liquidity zones here and use them as targets on the way back up. So these are pools of money left behind, because if I were to drop frames, it would just look like a consolidation zone before that sell happened. Okay, and then you could even do the same relative to down here. Okay, just marking these zones, because again, this is going to help us know where the money is and what we're going for, when and why. There we go. Liquidity. Boom. All right. And now the same deal with this. Now you don't have to get to this finite of detail, but again, I watch a low amount of pairs, so I keep it real detailed. So that way I just know as I'm watching it throughout the week what I want to do and for what reasons. This is also a huge liquidity pool here. This is insane. This is like a high frame kind of pool there. We'll keep it simple and actually just do straight horizontal lines through and through. Okay. And now everything is kind of shaped out, right? Like we know what's going on with our weekly candle. We see the movement that's going on so far that's setting up. We have our liquidity zones marked now. We can even, if we wanted to, drop to 15-minute and get even more detailed, right? It's all up to you guys how you want to do it. And then for me, the last thing I'll do is my point of interest or my institutional block, real rise block, order block, whatever y'all want to call it. Y'all pick. Okay, so to me, the last, as a matter of fact, let me save this as a tool real quick. Okay, let's use save drawing template as weekly. I'm gonna say this is weekly candle high. So now every chart I work with has one. High and low. There you go. There you go. All right, I cannot type. So now that we have that, we'll just call it that. We can call it that for sure. Because now at this point, all I'm doing is playing the waiting game. And let's flip this real quick. Boom, there we go. See, now we know. Now we know where our trigger spots are, where we really want to smack that buy or sell button. So this was the last up candle because price came down, price came back up. This is the last up candle before price swung and then broke the low. That led to this whole swing low being created, which makes this my point of interest to the T. Okay. If I want to get even more detail, we can use a 15-minute. Okay. I'm gonna just keep this whole zone. I like that. I like that a lot. All right, and then funny enough, this whole thing looks like an inverse head and shoulders. I'm just gonna call these patterns out every week that I see them, just so I can help you guys train your eyes to see the same thing. This could be drawn up different too. Could definitely be drawn up different. Yeah. I like that one. You could even do this one here. Maybe the OG's better. Yeah, that's better because then you had the extension down, so the price pulled up, made the extension move, and then continued the pattern. So now we have the same thing happening on this side. This would be a valid entry now to get into the buys. Okay. So I'm gonna call those out every time, so that way you guys can get accustomed to seeing patterns. The same thing kind of is happening here. It's just on a small scale. And the reason why this is happening so fast is because whenever a price moves quickly in one direction, it'll move quickly in the other direction. So it'll do the same both ways. So if you gain profit really quickly going one way, try to grab it before it starts swinging back. And if it is going to swing back, actually, it's a good time to get involved. So we're going to look at GU here, and then I'm just going to speed through here. I know I'm going mad slow, but if you guys do like the detail of this, definitely feel free to let me know in the feedback section so that I know whether or not I should be speeding up or slowing down. Again, I like to keep a chill pace and then break it down in a way that you guys can get like full coverage of and see what I'm seeing. So again, we're gonna make all of our adjustments. I'm not gonna lie, I'm gonna clean this this whole pair because I want to start with new lines. Looking at the monthly, like, oh man, I love looking at naked price. It's just so much easier to know what's going on. The lines again just help me find my entry. So we know this is our current month right now. All we want to do is go down to our weekly. The motion of the monthly looked like we were dropping, right? So price right now looked like it pulled up and is now dropping a little bit, but also respecting its peak lows. So if I'm looking at this on a low frame, we're probably somewhere in this little area. Okay. And if I'm looking at this whole leg, we have our weekly high in the 127 flat 126. Okay, so weekly target will be here, and then I'm gonna mark this as a mid-level 126,500. Yeah, I don't know. Okay, there you go. Okay, boom. There you go. And then we'll do the same down here. Our weekly low at 1. I'm gonna do 119 flat. So that one we can just round up, do an estimate. And this is why when you do again look at these weekly target lines, think of it as a zone and not just a line. I know it's hard to not look at it that way or to perceive it that way, but over time you'll get an understanding of the fact that price will never just perfectly respect everything every time. So think of it as a zone. Just anticipate a reaction, and that reaction in favor of what that line is supposed to be there for. So now that we have that, we can also go right back up because there's one more thing we got to do. Again, you don't have to do this. This is what I'm just adding for this week to just improve my accuracy on entries. Let's see. So we have that marked and we have this zone. So again, you want at least the bottom line trapped in there, or the bottom, like the tip of the wick trapped on one edge, and then just squeeze it as much as possible. So we have a really defined zone. So now we know if price is coming up, stops going up, and starts reversing, what's happening with the candle. And if we go to the daily, Now we can mark our TP zones going both ways. TP1. And remember, I like to put them in zones where price needs to break something. So if price broke this structure, I know that could be a potential reversal. Okay, so price comes down, is trending, right? It's respecting its trend, right? You get the rejection here. If it broke that high, it would probably test there, rise up. If it broke this high, probably test here, then wipe this out, come up. And that's granted that it respects this. This would probably be my TP2, right? And then TP3 would probably be somewhere up here, because if we break past those levels, you know, why would it, you know, why count out that it would go that high? So that's how I would do that. And remember, you want to keep things relatively tight, because these big candles moving, it takes a lot of time. It takes a lot of time. So you don't want to have super large gaps that you're gonna have to wait weeks or maybe even months to fill. So here you go. See, so the way I drew that out, like that's literally how I'm visualizing the markets every time, both ways. I just understand how to apply structure to how it should move respective to one side. And then we'll go ahead and do the same thing to the downside. So price were to continue my first TP. Again, looking to the left, see if there's anything more major. So that's a good one for the first one. Okay, that's pretty close to good amount of gap. So we know if we're coming back for it, what to aim for. TP2 from that zone, I'd probably look for one TP around here. Just right here. Yes, sir. Okay, hold up. Might have to move that up to the second candle. Okay, but again, anywhere a wick was created, price left, did not come back, that's a great zone to mark. Because again, there's a potential that a contract is just chilling. Banks are like, nah, cuz we need that. And if they really wanted to fill that, I could see that being a major grab right there, like them wanting to really wipe out everybody before going up. But again, with how I see GU is supposed to move over time, it's looking like it's supposed to be buy. So we might get some wild wick and then a really clean buyout to rise up. But this is wild, yo. This looks like 3 pushes down on the monthly. Like if I'm looking at this on a bigger frame, this kind of looks like what, right? You got this extra one right here. Right, so it look like you got this falling price situation going on. Price look like it broke out. See right here, might drop, fill the wick, and then we don't know what's gonna really happen if it gets that low. Yeah, so we'll see. We'll see. But now that that's marked, we go ahead and have fun on the lower frames. Go down to our 1 hour. We easily know that our trend was pushing this way. Our peak low or our swing low was down here. So this is our swing high right now. Okay. It's the most relative again, because it was the most recent high that wiped out the peak low here and created this. Okay, so now this is our swing low. This is our next anchor point. So if any of these break, we know price is bending to go one way or the other. And now we can go down to the 15-minute and get our liquidity pools and points of interest. Okay. So again, all my other weekly analysis that are going to be happening after the NFP Fridays will be shorter, but like the ones like basically the top of the month, if I ever do a weekly analysis, they're going to take longer. So definitely expect that. Expect me to be readjusting lines and refreshing everything for the month, because again, we're trying to do that same thing consistently for a year. And then if you have a plan that you're just following every day, you're basically you should be able to scale your money by the end of a year. So you want to like structure your trading in a way that over time you have a scaling plan. And then as you work day to day or do what you have to do throughout the day, just stay consistent with this and things will work itself out. It's ultimately how persistent you are. So we have, this is a big level right here. And again, you can always do trend lines. You can always angle your lines. I deliberately do them horizontal and sandwich it because it's easier for me to know when price is not respecting something anymore. It's easier for me to know when it's churning as well. And then we have our institutional block where the last up candle was that one that led to price. Actually, no, it was this one because price went down a little bit. Then this is the last push up before it led to price breaking. And we can go ahead and do real rise block. Okay. Price led to here. And actually, let's mark that one and then we'll mark this one. Because sometimes, you know, it's not always just going to respect one. It's okay to have two. So that way, if it breaks to the next one, you know what's going on. You can also look to the left for more liquidity pools. So this would be another valid. I would actually do this. Okay, and a good marker when you're marking these liquidity pools, for me personally, I like to, if I mark it, I like to see where price not only broke a certain area out of the zone, but then was able to come back and make a retest formation before leaving. So this one came back in, went up, tested, basically pinged the high, came down and retested the low, but couldn't break down here. So then got out of there. So this was the break and retest, and then you'll see it clear on like a 15-minute. So if I were to go back, it would just be that same movement, but just more detailed. So you would have known right here to get it because it's just respecting the top line. It's throwing a wick on it. So we'll see. Oh my God, this is going to be a great week. I'm not going to lie. I'm excited. Whenever you have things mapped out, you're prepared already. So at that point, you're just using time itself. Again, our 4-hour chart to time things in our entries. And that's about it. So that's that. Let's go down to AJ. Man, some great setups from last week for real. This one, I think I could keep it the same. I'm not gonna lie. Yeah, this is fine. I will change, if anything, my take profit lines. I think the weekly targets are cool. TP1 we can easily do right here. That's just a no-brainer. We got TP2 we can keep there. TP3 keep right there. TP1 to the upside, we'll shift it. So we need price to bend this way. TP2, I'm gonna throw right on here. Actually, let's keep that. Let's keep that right up here. And the reason why is because I do think that AJ will make that move back up later on. There's just more money to grab. It's just a matter of when. And we already have immediate TPs to the downside. And I like the levels marked for this TP2 or TP1 through 3 to the upside. So with the monthly right now, it's looking like it's going to sell. And then we're going to probably get a retest at one of these low zones here. So again, now we're on our weekly chart. So we're dealing with this candle from last week. Okay. And we're dealing with the peak low being right here. Okay. So now we know candle high, candle low. And then we've gone to our daily, or at least down to the 4-hour. We see that happening. We go down to our 1-hour. We see how that's playing out. Ooh, this is a setup right here that I used to help me out last week for sure. We have our swing high. Should be right here. Okay. It did not break until, yeah, it didn't break until after that high came back up and then closed near the low. That's when it broke through, and then now we have a situation where prices kind of like to test that zone and failing to break. So that's a valid entry. Um, but these are like the types of entries we get into where we know once it goes in our way, you could put your stop loss straight to break even and then let it ride. If it comes back, that setup was not ready at all. Like a setup that's ready will not come back. That's just how the markets work. So it's totally okay if you get bumped out, whatever. Let me change this right quick. Mm, 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 mm. Mm, mm. Just, yeah, boom. Have our swing low right out here. And when you have lines touching over one another, that's perfect. That's called confluence. It means you have multiple lines that are showing you multiple reasons to be getting into a certain level. So it does not hurt to have your lines stack or nothing like that. If I go down to my 15-minute, this looks good, man. This looks like a valid setup. I would take that, man. Sheesh. Sheesh. Sheesh, high TF. That's how we move, though, for sure. Not gonna lie to you, there is a small amount of liquidity pools. There ain't a lot to deal with. Of course, if I zoom out, go to the left. If I ever do that, I like to only go on a 1 hour because sometimes the detail on 15-minute, you can't go too far back with it. And again, I like to keep everything pretty relative to the current time. So same deal, same deal. So we know that's liquidity here. About this situation here, I would use the double top as a sign here. Okay, so yeah, one top here, two tops there. One just poked through a little bit before, but that's okay. They got the same thing playing out again right here. So you might get a retest off of here and then a push up. Or if it doesn't retest and it breaks back inside of here, we can say we're going down lower. So this is why the detail matters of how you're trapping price in your lines, because if it prints inside, it's going to probably keep going down. Then you can drop to like a 5-minute and see a structure there. If it prints inside here, it might go lower. So it's reading price off the lines, and then you're doing it depending on how patient you are. If you're really patient, you'll go higher, higher, and higher up on the frame. But yeah, rinse, wash, repeat for real. Now, let me see something real quick because it's almost very possible that yeah, no, that's definitely valid. That's the current swing high. Because your previous swing low would have been here, your previous swing high would have been here. This was your new one because that wiped it out right here. Our point of interest though is going to be around right here. Last up candle. Go to 15-minute right quick. Keep in mind, I like to keep it relative. And then the more detailed, the better for me. Okay. This is why we have price struggling to break this. Point of interest, it's a point of interest, and then you have a potential sell setup like that. But again, you can be a patient trader, wait for the breakout, wait for the retest, then get in. Okay, so let's go ahead and mark this up. Boom. So yeah, I'm gonna keep a close eye. I think what could happen is just price might consolidate more, and probably just might channel a little bit, right? Probably play around in this zone and then start moving down and then break through by the end of the week. Or it could do that same thing but then like break out a little sooner and then push up, and then we can get that move down, right? So there's a lot of ways it can go, but again, um, because we have these green like zones that mark our previous week's peak, high, and low, it'll help us play around with what's going on going into the next candles. So let's go down to GJ. And don't worry about UJ. UJ is already pre-marked up because I actually left this alone because of this setup right here. I actually seen a pretty good setup already. I wanted to get into this last week, so this is probably gonna be the one I start out with because this should follow up with GJ and AJ. It should be late though. So the way I see that one, I'm gonna take this off rip because that's what I was taking Friday evening. So I'm doing 0.5% of risk because of where my just because of where my daily loss limit is at. Actually, because of where my account is at, I have about 1.5% left to risk on my entire 100K. I'm still on the second part, but I'm basically looking to bring it back this week by applying the strategies I'm showing you now. So like this, if I check back in about another hour or two, price should be moving down in favor, and then I'll probably have this at break even, and then it's a trade I don't have to really care about. If it comes back, it is what it is. If it doesn't, it's literally going to help me recover the account to where I can start taking 1% setups moving into the week. And then you guys already see how I have it outlined to where I'm trapping the market to make sure that I'm always able to find the next best position throughout this week. So we'll just keep doing that same thing, man, for real. Rinse, wash, repeat, and the repetition will definitely show. So with this on GJ, I'm going to keep the lines the same as far as our weekly lows and highs. And then going down to the daily, I do have, okay. I like this. All right, so maybe we'll actually rock out with that. So we'll throw that there. We'll throw TP2 here. This is a perfect little mid area because you want to just kind of, like from what I visualize, just by having that line there, is this little movement here and 2 taps. So that makes it a strong area. That two times we're buy. Honestly, this second time where people buy it is probably where they killed it for sure, because they knew that after this first time that it left and then came back to retest but respected. That's abnormal. Comes back, tests this high, breaks through both, and then they're good. So they're probably going to look to come back there. And then this last one will be this is like the people that were ballsy, wanting to get in right away and just kind of knew that price is going to play out this level. So they just bought it. So yeah, I like that. And then we'll go up to, we'll do the same thing, vice versa. So if price gets anywhere near up here, we know it's breaking our entire structure, and then we know what's going on the way up. So again, our weekly, we'll go up to that frame real quick. We'll mark those really peak highs of the candles for the week. Remember, we only got 7 days of movement. That's about it. 7 days of movement. So there can only happen, only so much can happen in the span of that candle movement. So the more concentrated we can have it, the easier it is to figure out what the bigger frame is doing. Okay. So if you want, you can zoom in as much as possible. Squeeze, because again, you want to get the detail out of there. As much detail as possible. Okay. If you want to give it space, that's okay too. There's no crime in that. Just do it how y'all want. I'm only squeezing it so it's not in the way as much. So now we know this is how price is moving, or it has moved in the last week. All right, so we had 1, 2, 3 days, 4, 5, 6. Well, I guess 1, because the movement down, 2, 3, 4, 5, 6, 7, right? And then the 7th day was just everything went nuts. It's a lot of pit movement. Let me see. On that 7th day, there's 376 pips in a day. And then look at this. This is the next daily candle. Look at, is that our retest for the day? Let me see. It might be. We know right now this is already our swing high and swing low. So if I drop to my hour, we already know what's going on. Right? So now we have our anchors. Right? And boom, same thing down here. You know, this is an anchor point. Easily. Boom. Okay. So now we have both anchors. You can now start to find your liquidity. It doesn't seem like there's going to be much in the space that we have. You can definitely still find it though. Right here. Okay. Boom. All right. Yep. So keep in mind, the reason again that I use these arrows is because I can always point to the exact candle that causes the break of structure. I can always point to it. So I know to break structure, we need to break it at this point, at this wick. This was a candle that broke it. To break structure to the upside, we need to have price break to the upside here. So this was a candle that did it, went up, but at the same time respected this high. Therefore, we had to fall. So right now we have price trailing back up. We do see another liquidity zone. If you want to use the angles, you can. Again, I like to keep it simple. I like to keep it sandwich so that I can see price really play off my lines, and my lines are rigid. There's no leniency. So it's either gonna go on one side or the other. And let's actually put this right here because this could be the same little fake false breakout and then throw a wick. So that way I know, kind of like with this situation where price went up and then came back in on that 1 hour, it probably was a wick. Yeah, it was just a wick, just a tail. So that way on that next hour, we knew once this got thrown, we're off to the downside. So the same could happen here. So in the next hour, if we're still testing this off to the downside, I can take that setup down. Okay, so in the meantime, I'm gonna wait this out for the day. This might be just my setup of the night because of how tight my room is on my test. I don't want to really overtrade. I want to take my time and then find good setups this week. Let's go ahead. This is a point of interest right here. Last up candle before the down move. Go ahead, throw on the real rise block. Go down to 15, find a more tighter spot. Excuse me. Okay, so the last up candle for the down move had to be this one right here. Actually, that's one. Again, this could be valid for one, but also this could be valid, just as valid as that one. So that's why we call them areas or points of interest, because then we know it's not just one location price will stop at. So if price respects and close under, I could say it's actually valid to take this sell back down like this. Okay, and you might even be able to get a tighter one off that next hour if it plays into it well. So here I'm gonna go ahead and just trap that. Oops, liquidity. Okay. Now, so there we go. Now we have our price trap. Now we're chilling. Yeah, I'm gonna do that there, just because price poked out, came back, and then that's where the test happened. So now we see price comes back in and wipes out the structure. Price is testing. If it can't break, if we can say it's safe to say we're going down here. Price breaks through here, comes back in the zone, tests, then we can say it's safe to say we're coming down to here. So it's just, yeah, just patience. So now go up. And again, if price starts breaking through this, we know what's going on. We know it's potential that maybe this is our area of interest, right? Because this was the last area that ended up allowing this area to break. So now price may come back up to there. So we'll play the waiting game throughout the week, as y'all all know. Hopping back in on the same routine. We see UJ already kind of rolling in profit there. We already know we have my next 4-hour candle that's going to open at 8. So in that next candle, if I see that's valid, plays into this, then yeah, we can go ahead and probably place another sell down. But as for UJ, I'm not going to really break this down. I'm going to just kind of brush it up. I feel like you can kind of already see the outlines and overview of what I'm looking at with the lines here, especially if I were to start top down. You can kind of already see this is our current monthly. I guess when it comes to the weekly though, hold on, let me see something. Yeah, when it comes to the weekly, monthly, the weekly targets for the lows and highs, we could shift these. We could shift these for sure. That's that 127. Boom. And let's do the top. So we have 137. Okay, and the reason why I'm doing that peak area is because, again, it's a flat level that price reacted pretty strong off of. We also have the TPs 1 through 3. Again, there was a point I could see the levels on a different. I forgot how. I think it was a different broker that showed it, so I was able to know where to put these. I also chose flat levels to just kind of put them at 138. I think this was like what 136 and then 134. So yeah, so price may come back to this 134 zone and then get a weird wick reaction. If it breaks through the 134 zone, we can say it's going to drop lower. It may become as low as 131. Just depends on what price wants to do. As far as the daily TPs, we can definitely make adjustments because that's way too much room. Absolutely too much room. Never want to have it that low. That's ridiculous. You can. I'm not gonna say you can't. You can trade however you want, but just know that's gonna take a while. That would take a while. All right. You would start second guessing, probably doubting everything you done and analyzing that trade by the time it even makes a move there. But that's the art of swing trading, though, for real. You just have to know. So, yeah, these will be my zones for the TP to the downside. I don't know what this, what in the world? Okay, so I guess I mixed up some of mine. All right. I ain't gonna hold you. Let me delete this. Let's leave that TP2. Let's put TP2 exactly. Man, yeah. You know what? Let's delete that. Keep 138 where it is. And then we'll put TP1 up here. Okay. So that's a confluence line. We'll make this probably TP2 at 138. And then at 140 flat, I'm going to do a TP3 there. Maybe 139. Yeah, 139 makes sense. They'll be going ham with the pips like that. Okay, boom. So now that's all. That's set. That looks a lot better. Lines were just interfering too much. So again, you always want to make sure that you're giving space between the gaps for whether it could go up or down. Then you break down the detail to the low frame. Then you find your liquidity zones on your 1 hour. You find your swing high, your swing lows, which in this case for me, okay, our swing high was back. Well, it's currently right here because this is where price failed to break this previous swing high. So I can, again, say it's safe to assume price is going to come down to wipe out this swing low. Which means price may continue in favor of a downtrend. Boom. So now Wow, there you go. So, yep. Okay. So, yeah, that's it. And I mean, like to the left here, you can already see some targets. Yeah, we can shift those to liquidity zones, and then we can get as much detail as you really want to. But at this point, since we have everything as well, what I like to do is, since I marked up everything, turn on my EMA lines, see if that even helps and plays into what I'm seeing. And again, we have no bias. So, like I was saying earlier, like you can trade it both ways how you will. Like I was talking about AU, I might buy this. Um, this looks like it's trying to push higher. You can see my blues crossing above, meaning we're going into an uptrend on the low frame. So it's possible we will get into these points of interest. Same deal here. We're getting that cross. So off this hour, it just started at 6 o'clock. So price may be pulling back for like 2 15-minute candles. And then maybe that third or fourth 15-minute candle in, we'll see price buying back up. Just depends on how these candles want to print out. We'll go down. Same deal with AJ. It's looking like it's going to be a bit of a buy. GJ, it's looking like it's selling, but it's just the crosses. So this looking like how it is, the blue being under the red. When the red's over, it means it's in a downtrend. And then when the 200 is over, it means it's also in a downtrend. So this is over, it's in a downtrend, but since it's crossing, it might bounce up. If it wicks off of this and falls back within, and then the EMA's uncrossed, then we know where we're going. So I don't leave or trade strictly off my EMA. If I'm about to pull the trigger on a trade, I'm still iffy on something, then I'll pull it up so that way it can play further into my momentary bias. But I hope you guys did enjoy or could at least keep up with what I was talking about all throughout this video. Again, I do plan on like actually dropping like modules to kind of explain each component to my strategy in depth, so that way you guys know exactly why I'm using each tool. And then that way over time you guys can kind of customize and do whatever you want with your own trade setups. But I hope that does I hope this week does help y'all out with this weekly analysis. I hope you guys do have an amazing week, because I know it's rough out here. The gas prices is blowing people. So I hope we are, figuring out how we can make it work while we can. Once again, I will appreciate any feedback if you guys leave in the comment section. If you guys could drop a like, comment, subscribe, share with all your loved ones if you feel like this was genuine information that actually helped you helped you learn something today. If you feel like you learned something today, definitely share it. So again, peace out, y'all. Thank you guys for coming through, and bless up.